Well, hello everyone. Hope you're all having a great evening. This is Jean McDowell with TradersCoach.com and welcome to Wednesday Night Live and more. And Bennett, without further ado, I will turn it over to you.
All right, Gene, thanks so much. Great to be here, everybody, and welcome to this afternoon's event. All right, first of all, Happy New Year, everybody. Hope everybody's having a good holiday season. This is a holiday week, and I got to tell you, we have a great turnout today. So isn't that great? Okay, usually during the holidays, things slow down a little bit, but we certainly got a full room today. All right, so I am going to discuss multiple time frame analysis. I use it pretty much on any market I trade, whether it's day trading or futures market. In fact, I can't think of a market I don't use it on. So I'm going to show you what that does and how it can actually help you in timing your trades better, because that's really is the key behind using multiple time frame analysis. We're also going to talk a little bit about why it works. You know, it's one thing to use it. It's another thing to figure out or know why it works. So we're going to go delve into that. And so that has to do with fractals in the market and, of course, fractal symmetry as well. All right, so now we got our websites at traderscoach.com. We've got about 42 websites currently out there, and they pretty much all filter back to traderscoach.com. So I don't know how technically you've that all together. Now, we've been in the business a long time, and we've been doing trade shows for a long time. We started in 1998, so we certainly have been around the block, certainly not our first rodeo, as they say. But we have done traders expos literally around the country. We've done them in New York, we've done them in Las Vegas, we've done them in LA. Pretty much you name it, we've been there. I've also used to do all the live trading challenges. I think they still do those, you know, since everything is gone pretty much on the web now, everything's online. The trade shows aren't quite what they used to be, and because so much stuff now has moved online. So I think they still do the trading challenge. I'm not sure, but I did that for them for years and years. And we took usually a huge booth, and it was a lot of fun. Great to meet the people. But most people now really prefer the online thing. All right, so a lot of online events. Also, too, we have several books available. All right, our newest one is Money Management for Traders on the far right. And Gene will probably put a link up before the end of the session on how to get our books. You can get them. We have our own Amazon page, so you can get them right through our Amazon page. Also coming out with a new edition on the art of trading, which is not on this slide currently, but that is going to be out in 2023 next year. And it is a second edition of our successful book called The Art of Trading. Our publisher wanted us to do a second edition. Hard to believe, but that first book came out in 2008. Talk about time flying, right? So anyway, she'll put that link up there for you in just a little bit, and then you can check out all our books and see which ones you like. Also, too, we have to tell you about the risks involved in trading. It is possible to lose some or all your money trading the financial markets. I think kind of everybody knows that by now. But we want you to realize there is risk. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand. You have to accept the risk, but you can also work in minimizing risk. And that's where a lot of our books on money management come into play there. Also, too, run any of the trading concepts we talk about today past your financial advisor or money manager. You know, there's a lot of issues that come into play to see if a concept or even a trade we may look at is suitable for you. And things like your age, your net worth, your tolerance to risk, etc. So definitely check that out and always trade with risk capital and know how to do the trade size and all that kind of good stuff. All right, so let me just ask a general question, and there's a questions window in the webinar software, so feel free to use that. I'd love to get a little feedback when I'm doing these. So technical analysis. Have you ever been asked, what is technical analysis? And what does that mean to you? So I'd love to hear what you guys have to say. What's technical analysis? And is it better than fundamental analysis? What do you think? What's the primary difference? I'll just give that a minute. Okay, a lot of different types of answers are coming in. I think one of the best ways to sum it up is technical traders believe that everything about a market is represented in its price. So whether you're drawing in fibs, whether you're using an indicator, or any of those types of technical tools, it all starts with price. And price is a truth of the market. What's another truth of the market? Think about it. If price is a truth of the market, price obviously then has to represent all known information, right? So it really is an absolute truth of the market. But isn't volume and momentum a truth of the market? The number of trades, that's a truth, okay? The volume, how fast price moves over time on a chart, that's a truth of the market. So there are some truths, but there are some truths that are not truths. And so as a trader, you want to try to use the tools that represent the truths of the market. And this is what we have done at traderscoach.com with our applied reality trading software. We try to represent, our software represents information it looks at about the truth of the market. And I think that's what's always separated us from other folks out there. All right, what about price history? Is price history important and truthful? You betcha. Okay, that's the footprint of the market. And price patterns, okay, are historical truths of the market. And they can be represented by many different types of levels. We have support levels, we have resistance levels, and we also have fractal patterns in the market as well. And I'll show you a couple of those in a little bit too. Ultimately, the goal for technical traders, really more than fundamental traders, is to make money in both bull and bear markets. Most fundamental traders are usually looking at value in terms of price. They're also looking at company facts, like who's running it and things of that, PE ratios and good stuff like that. And so they're really looking at making an investment to the long side. Whereas technical traders were a little more fluid and flowing with the market. And therefore, we make money in bear markets too. All right. And a lot of fundamental traders really don't trade that much to the bear side. Some do, but a lot don't. All right. So symmetry and fractals. We have to talk a little bit about this because this becomes important not only in multiple time frame analysis, but also in the designing of a trading system. And this is what we had to take into account when we created the applied reality trading system. You know, art, we call it art. Art has been around for a long time. This is not a fly-by-night type of thing. We've been doing this for pretty close to 30 years now, and the website's been in business since 1998. So this is something that's been pretty solid in terms of being around a long time. And it's because it works. That's why. All right, so fractals are patterns that repeat at different scales. They appear in many natural systems such as coastlines, rivers, and many plants, including ferns. So if you look at nature, which is what this is getting at, a lot of the shorelines, plant leaves, coasts, now we already covered that, shorelines, but actually even lakes, the way they meander, they all move in fractal type of movements. They're not linear, okay? And that's important. The markets are no different. The markets are a representation of human behavior. And so therefore human behavior is not linear, okay? It moves in fractals, just like the rest of nature. Since the stock market is a system that arises, again, from natural human behavior, fractals are part of its price history as well. And since human behavior is repetitive, fractals should help us to calculate the probabilities of future market moves. And this also comes under the realm of the fact that in nature and in life in general, the direction something takes is the path of least resistance. So remember that. We'll come back to that. So people in markets, here we are, usually take the path of least resistance, and therefore when they hit a fractal, they change until they hit another one. So fractals are changes in behavior. Okay, that's technically what fractals are. And there's fractals in terms of physical, temporal, okay, and we see them in the markets and in human behavior. Think about when somebody hits rock bottom and then they change. That's a change in behavior. That's a fractal bottom. All right, if they go back down and hit it again and go through it, chances are, okay, they did that because that's the path of least resistance because it was too painful to change. So eventually the pain gets so much that the path of least resistance is in a different direction. Same thing with the markets, same thing with most everything in nature, okay? All right, so again, we see these fractal changes represented as price patterns. And if you look at the price patterns, you can see when, for example, when you have a pivot in the market, okay, those pivots represent changes in behavior or fractals in the market. All right, let's switch from that topic and go to market symmetry. All right, what is it and how can it help us? I think the best way to really talk about this is to show you something, give you a little bit of an example. All right, so let me ask you a question. Based on all the price pattern history you see on this, here's a change in behavior, fractal, 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 fractals. All right, what time frame is this? Okay, can you tell me what time frame this is? And let's face it, the answer is no, I can't even tell you. All right, because I see this type of pattern on different time frames and different markets, same type of similar type of thing. We see support, we see resistance. We see support, we see resistance. We see trends, we see pullbacks. All these are represented by patterns in the market that form that type of oscillation in the market. And so the answer to this is that happened to be a stock, SSI, and it's a daily chart. How about this one? What time frame is that? Again, we see fractals up, we see fractals down, we see pivot points. You get the picture. All right, that's the E-mini contract on a 2-minute chart. How about this one? That's crude oil on a daily chart. How about this one? That happens to be applied materials on a weekly chart. So we really can't tell what market and time frame these charts represent. And that's because of the market symmetry. All charts exhibit price patterns that repeat. And market symmetry means that we see these same price patterns on different markets and different time frames. That's why when I showed you a chart, you couldn't tell me what market it was and what time frame because they show up throughout different markets and different time frames. That is what market symmetry is. You see the symmetry of patterns repeating on different markets and different time frames. And of course, the textbook answer to that is similar price patterns occurring on all time frames and markets, which is basically what we just proved. All right, so the next question is, how can market symmetry help us? If we focus on price when designing a trading approach or system, market symmetry allows us to use that same system across all time frames. So, for example, if your system uses price patterns, or it uses some form of volume, or it uses some form of momentum, which are the truths of the market, you're going to see that being generated on all time frames and all markets. So therefore, if you're looking for a specific pattern on one time frame that your system uses to generate a signal, like in the ART system, then we're going to be able to see that on any time frame in any market. That's why it works on all markets and all time frames. If a trading system does not work on all markets and all time frames, then chances are it's not really using any form of the truth of the market or price patterns that repeat on the different time frames. All right, so that's key. All right, this even allows us, the same concept of market symmetry allows us to analyze the same market using the same trading system, like I said before, on multiple time frames to help determine the short term, intermediate term, and long-term trend of that same market. So if we take the same trading system and we have it set up so we're looking at, let's say, a 60-minute chart, a daily chart, and a weekly chart, we're going to be able to see signals on each one of those time frames. So therefore, if you get a signal on a long term and you get the same type of signal on a short term, then that is a high probability trade in the direction of that signal. And that's the purpose of multiple time frame analysis, is to take a look at these different time frames and try to connect as many dots as you can between them to increase the probabilities of trade success. And that is the key reason we can apply a multiple time frame analysis to any market, any time frame. Okay, market fractals. We're going to shift here again and come back to symmetry. All right, market fractals. What are they, or what is it? Are there more than one? And how can it help us? All right, again, a market fractal, which we talked about already, is just a change in behavior. That's the easiest way to think about it. There's a lot of mathematical definitions to it. A lot of people say, look at your finger. Your middle finger represents a fractal because it's the highest finger of the 5. So as a general rule, a lot of trading systems use the 5-finger fractal analysis when deciding if there's a fractal in the market. The only difference is they replace the fingers with price bars. Okay, and usually these can be seen as pivot points or price reversals on the chart. And yes, you can have many, many different fractals. You can have an up fractal, and then you can have a change in behavior and it moves down and forms a down fractal. So take your hand, all right, and have the palm face you, and then turn your hand down, and then your fingers are pointing down just like the price bars would on a downtrend. So that would be a down fractal, up fractal, representing changes of behavior, representing the 5 fingers or 5 price bars needed to really capture a fractal. All right, now fractals are trading opportunities marked resistance levels. We trade from them. In fact, the art system draws triangular icons between the fractals, and these fractals also represent trending patterns in the market. So if we take a look at this chart here, all right, we can basically look at all the areas where we had changes in behavior. Okay, all these represent some form of a fractal. And usually when a fractal is taken out, the market tends to move in that direction, all right, until another fractal forms. So here is an example of, going the least path of resistance, comes down, and so every time it breaks a fractal or that change of behavior occurs, then the market moves in that direction because that's the path of least resistance. So that's kind of how they work. Now, our trading system, the art system, takes a look at these price patterns. Okay, for example, something like this could form a pyramid in here between the fractals. The lower fractals will represent the stop. The upper fractals represent the entry. There's one additional thing that the art system does, and it looks at the momentum on the way up, on the way down, and then once again on the way up. And we have found the formula for the highest probability formation or pattern to draw those pyramids in. So not every fractal would generate a pyramid trading point because we're looking for the best ones, okay? And there are better ones than others. Go through here, let me just, all right, and okay, so let me just answer any of the questions before we end here.